Today, we'll discuss various practical questions on the basis of interest on capital. But see, before we start with the calculation of interest on capital, please do watch my previous video related to the rules applied for calculation of interest on capital. So let's begin with the question. The question number 1, A and B are partners sharing profits and losses in 3:2 ratio with capitals of rupees 2 lakh and rupees 1 lakh respectively. The question further asks, show the distribution of profits in each of the following cases. This question number 1, please see that we have various cases, maybe 8 or 9 cases are there. So the case number 1, if the partnership deed is silent about interest on capital and the profits for the year are rupees 90,000. Please check that we are being asked to show the distribution of profit, right? And it is being connected with interest on capital also. So when we have to show the distribution of profit, please see that we need to prepare the P&L appropriation account. And we have to decide whether interest on capital, which is being given in this case 1, is to be treated as charge or appropriation. So let's see once again. The partnership deed is silent about interest on capital. So if the partnership deed is silent, then Partnership Act 1932 says that no interest on capital be provided. So in this question, we have been given the profit of rupees 90,000. We'll be preparing profit and loss appropriation account for the year ended. Since the year is not being mentioned here, so we are just putting up the dots here. Now please see, in this case, the profit of rupees 90,000 is being transferred, right? This is the net profit given in the question, right? Please see, this is the profit given, transferred, and will be utilized for the distribution directly. Now see, this is being divided in the ratio which is being given in the question. Please see, the question says there is a profit sharing ratio of 3:2 between the partners, right? So please check how it is being calculated. In this question, we are not calculating interest on capital because the partnership deed is silent, right? Partnership deed is silent, so we are not providing interest on capital. The profit so given in the question is being divided between the partners in their profit sharing ratio, that is 3:2. So the distribution for that, the working note is being prepared. Please check. I hope it is clear. Now let us move on to the case number 2. In this case, see, the question number 1 remains same. The basic guidelines remains the same there. That is, A and B are having the capitals of rupees 2 lakh and 1 lakh respectively, and their profit sharing ratio will be 3:2 in all the cases so discussed, right? So in case number 2, it says show the distribution of profit. Please see, the major question is asking for showing the distribution of the profit, and the case number 2 says the partnership deed is silent. Once again, it is silent about interest on capital. So no doubt, if there is no information regarding interest on capital, no interest will be provided. Further, it informs that there are losses for the year rupees 90,000. So how much loss is there? 90,000. In this case, there are losses. That is why we have to prepare the profit and loss account and not profit and loss appropriation account, right? Profit and loss appropriation account is not prepared because there are losses. So the distribution of loss will be shown in P&L account. We're writing here to balance brought down. This is the part of loss, right? This is the net loss. Now the distribution will be done in the partners capital account as per their profit sharing ratio 3:2. 2. Right? So this case is again informing us that the partnership deed is silent about interest on capital. So interest on capital will not be paid, but we have to show the distribution of losses. So to show the losses, we have to prepare P&L account, and we have transferred two balance brought down, means this is the opening balance as given in the question, and it is being used to distribute between the partners in their profit sharing ratio, profit and loss sharing ratio, that is 3:2. Let's move on to the next case, case number 3. In this case, we see that if the partnership deed provides for interest on capital at the rate 6% per annum and losses for the year are rupees 90,000. Please check that the partnership is not silent, right? It is providing. So whenever it provides, the student has to judge whether it has to be taken as charge or as an appropriation. So we had discussed in the previous video that it should be considered as an appropriation, right? Because the accounting treatment regarding interest on capital is not made clear. Right, so whenever we take it as an appropriation, then we try to find out whether there are profits or losses in the question. So in the question, it is informed that there are losses. So whenever there is a loss, please see that we prepare profit and loss account and not P&L appropriation. So once again, we are not preparing the profit and loss appropriation account, although they are providing for interest on capital, but we cannot pay, right? Because we have losses in the organization. So when there are losses, please see, we'll transfer two balance brought down, this loss of rupees 90,000, right? And it is being distributed between the partners in their profit sharing ratio, that is 3:2, right? There is a difference between case 2 and case 3. Case 2 was silent, whereas case 3 is clear cut informing that partnership deed provides, but there are losses, right? I hope it is clear. Let's move on to the next case. Case number 4. In this, if the partnership deed provides for interest on capital at the rate 6% per annum and profits for the year are rupees 90,000. So here the question is clear cut informing us that partnership deed is providing. So again, student needs to take the decision whether interest on capital be treated as charge or as an appropriation. Once again, it is to be considered as an appropriation, and then they have to find out whether there are profits or losses. In this case, there are profits. Whenever the profits are there, again the students have to find out whether the profits are sufficient or profits are insufficient. How do we find out whether the profits are sufficient or insufficient? We calculate in the working note the interest on capital for both the partners. I would like to remind that the question number 1, in the beginning, A and B were having the capitals of rupees 2 lakh and 1 lakh, right? So we will calculate the interest on opening capital at the rate 6% per annum. That is to be calculated on in the working note. So here in this question we have the profit, so we'll be making profit and loss appropriation account, right? And when the profits are sufficient, then full interest be given. As per the rules, it should be the full interest to be provided to the partners. So we're writing over here by profit and loss account. This is the net profit of the year. This 90,000 is being used to give the interest on capital, the full amount of interest on capital to the partners given, right? And then we have to find out the divisible profit. How do we find out the divisible profit? We find the total of the credit side minus the total of debit side. So from this point, 90,000 minus 18,000, which gives us 72,000. This 72,000 is being divided between the two partners A and B in their profit sharing ratio, that is 3:2. right? So let's revise once again. The profit of the current year are rupees 90,000. So transferred here. Since the profits are sufficient, how we have found that the profits are sufficient? We have calculated the interest on capital. Interest on capital 2 lakh multiplied by 6 upon 100, that gives us 12,000, right? See this 12,000 for A. Similarly, we have calculated for B, that is 1 lakh multiplied by 6 upon 100, that is rupees 6,000. See this 6,000 for B, right? So 12,000 and 6,000, total amount 18,000. Then we have calculated divisible profit, total of the credit side minus the total of debit side, that is 90,000 minus 18,000, which gives us 72,000. These are the divisible profits, right? The divisible profits are to be distributed between the partners in 3:2 ratio, as the question is demanding that we have to show the distribution of profits. So profits are enough here, are sufficient. We have given the first interest on capital also, and then we have divided the profit between both the partners in their profit sharing ratio. With this, let us move on to the next case number 5. In this case, see, if the partnership deed provides for interest on capital and profits for the year are rupees 18,000. So in this case also, once again we say that we have to consider interest on capital as appropriation, right? Appropriation means interest on capital be paid only when profits are there in the organization. So we have profits, and that is why we are making profit and loss appropriation account. This rupees 18,000 being the net profit is being transferred here, and it is being utilized to pay off the interest. See that we have sufficient amount to pay the interest on capital. So full interest on capital is being paid, whereas we are not left with the divisible profit at all. Thus only interest on capital is being given. I hope this case might have brought more clarity. Let's move on to the next case number 6. Here in this, it is being informed that if the partnership deed provides for interest on capital at the rate 6% per annum and profits for the year are rupees 9,000. Now see that again the profits are there, thus interest on capital be provided, right? But we have to see that as we have done various cases, we have understood that the profit, the interest on capital is rupees 12,000 plus 6,000 for both the partners, that is 18,000. But in this case, we are not having the profit of 18,000. We have the profits of only 9,000. That is, this is being classified as insufficient profits. So when the profits are insufficient, we have discussed 3 steps, right? Let us see these 3 steps. First of all, interest on capital be calculated. So for A and B, we have calculated the interest on capital. So that is 12,000 and 6,000. Right? Now see, after this, in the step 2, we have to calculate the ratio between the interest on capital of both the partners. That is 12,000 and 6,000. That comes out to be 2:1. In this 2:1, the insufficient profit, that is case step number 3, 9,000 profits are given. These are insufficient profit. It should be divided in 2:1 ratio under the heading interest on capital, right? So for A, it will be given 2/3. Why 2/3? Please see the ratio is 2:1, right? Now for B, it is 9,000 1/3. So 6,000 and 3,000. Now this 6,000 and 3,000 has to be shown here, right? So by profit and loss account. These are the insufficient profits given in the question and being given to the partners under the heading interest on capital. But in which ratio? Please see that we are giving it in the ratio 2:1. Right? We are not giving as per the rate 6% per annum. Right? We are giving in the ratio. Which case is this? This is the case of insufficient profits. Right? Let's move on to the next case. Case number 7. In this, it is being said if the partnership deed provides for interest on capital at the rate 6% per annum, even if it involves the firm in loss, and the profits for the year are rupees 90,000. So the students, again, you have to take the decision whether interest on capital will be considered as charge or appropriation. Now here, this particular language, even if it involves the firm in loss, this language points out that interest on capital be considered as charge. So once we take the decision that interest on capital is a charge, then we have to make the profit and loss account. Please see once again, let us connect that in the question we have to take the decision whether interest on capital be considered as charge or appropriation. Why we have to take the decision? Because in the partnership deed it is being provided, right? And we find that whether charge or appropriation is our judgment. So here this particular line, even if it involves the firm in loss, helps us in making the decision that it should be considered as charge. Right? So when the interest on capital is to be considered as charge, then we have to make the profit and loss account. So when we have to make the profit and loss account, please see that profits are given in the question. So profits are given, let us transfer the profit. Profit always are being shown on the credit side. So this is the profit, the opening balance. So we are writing by balance brought down, right? And then since it's a charge, we have to give the full amount of interest. That is 12,000 and 6,000, right? Then the residual amount is 72,000. That is net profit, right? So this net profit, since it is a net profit, it has to be transferred to profit and loss appropriation account, because in the question we had been informed, we were asked to show the distribution of the profit. So here, if we have to show the distribution of the profit, we have to prepare the P&L appropriation account because we have 72,000 profit with us. Now we are transferring this 72,000. You see, this is the connection here, right? We are writing by profit and loss account, that is net profit transferred from profit and loss account. This 72,000 should be divided between the partners. Interest on capital is already being shown in profit and loss account. Why? Because it's a charge. When it is a charge, full amount of interest, full interest on capital be given. After giving the full interest, from 90,000 we subtract 18,000, then 72,000 net profit left with us. This 72,000 is being transferred here and is being divided between the partners in their profit sharing ratio, that is 3:2. Let's check how we have calculated the distribution of profit as this. I hope this case number 7 is also clear. Let's move on to the case number 8, which is the last one. Here it says if the partnership deed provides for interest on capital at the rate 6% per annum, even if it involves the firm in loss. So once again, this language, even if it involves the firm in loss, points that interest on capital be considered as charge? So when it is a charge, please see that we have to make the profit and loss account. Further, if we read, it says that the losses for the year are rupees 32,000. So first of all, loss always having a debit balance. So we are transferring it on the debit of profit and loss account. Showing it here, to balance brought down 32,000. So whenever the interest on capital is to be considered as charge, right? So full amount of interest be given. Full amount of interest. So full amount of interest is 12,000 and 6,000. Right? We had a loss, we have transferred here. Even if we have a loss, still we have to give the full amount. Right? So this 12,000 and 6,000, total 18,000. Now see, the total of 32 and 18,000 gives us 50,000. This 50,000 is the loss to the firm. Earlier it was 32, now it has become 50,000. Now this 50,000 be given to the partners in their profit sharing ratio, that is 3:2. So that is 30,000 and 20,000. How we are doing? 50,000 multiplied by 3/5. This is for A. And for B, we are calculating 50,000 multiplied by 2/5. So here 30,000 and 20,000, that's 50,000. Right? So here it's a 50,000. So this case was related to the loss, and the interest on capital was to be considered as a charge. Right? So charge, how we have been able to make it out? Because of this language, even if it involves the firm in the losses. So then it is to be shown, interest on capital is to be shown in the profit and loss account. With this, I hope you have been able to understand. Please try to connect for my next video related to interest on